Hello, and thank you for joining us. Welcome to the Mid-Atlantic Regional Council of Carpenters Benefit Funds Benefit Awareness Webinar. Whether you're watching this shortly after it's released or you're coming back months from now, we're glad you've taken the time to learn more about your benefits and the benefits you've earned through your hard work. As fund office staff, one of our most important responsibilities is helping participants understand and make the most of their benefits. We know that benefit information can sometimes seem overwhelming, so we've created this webinar to provide a clear overview of your pension, annuity, and health fund benefits. Our goal is to help you better understand how benefits work, the valuable protections that they provide to you and your family, and where you can turn if you need additional information. By the end of this presentation, hopefully you'll have a better understanding of the benefits available to you and the resources the fund office offers to help you at every step of the way. So thank you for watching, and let's get started. First, I want to go through a disclaimer that please note that this presentation is intended for educational purposes and provides a general overview of your benefits. Benefit provisions are subject to the official plan documents. If there is any difference between this presentation and the official plan documents, the plan documents will govern. If you have any questions about your specific benefits, please contact the fund office. So let me do some introductions. Our panel today consists of myself, Seamus Breen. I'm part of the fund's communication team. And with me, I have Katrina Baggerly. She is the MARCC Benefit Fund Office Manager, and she'll go over your MARCC pension and annuity benefits. And to wrap up the presentation, we have Heather Hatch, the Health Department Manager, and she'll discuss the MARCC health benefits. So let's go quickly through the overview of this presentation. We'll provide an overview of your pension fund, which is now the EAS pension fund, the MARCC annuity plan, and the MARCC health plan. We'll explain how these benefits work, highlight important features and recent updates, and answer some of the most common questions that the participants have. The important resources. We're going to be providing a lot of information during this presentation, so we always want to call out the important resources available to all the participants. So first and foremost, we start with the Benefit Fund website, which is marc.carpenters.fund. Think of it as your one-stop shop for benefit information, whether you're looking at benefit eligibility, you want a breakdown of how the benefits work, you're trying to access the member view dashboard, utilize the fund's website for all of your information. And if you can't find it there, reach out to the fund office and we can help you. Next is the member view dashboard. It's another very important resource. This is where you're able to view all of your accruals, more of your contributions for your pension and annuity, health contributions. You can view your actual health eligibility, your work history, beneficiary information, and much more. And I'll get into how to access the newer member view portal, which was just recently updated. We also encourage you to read the quarterly benefit newsletter. It's published to keep participants informed about important plan updates, new benefits, wellness programs, and other information that may affect you or your family. And finally, be sure that we have your latest email, cell phone on file. That way we can get you out any important emails, notifications. The fastest way to receive announcements from the fund office, the reminders, benefit updates, things like that. So we encourage you to make sure you visit the fund's website, have the most up-to-date email and cell phone file with the fund office. This way it keeps you informed. It's one of the best ways to make the most of your benefits that you've earned throughout your career. Now, I referenced the new member view portal. Make sure to download the new app. This is a improved user experience. Just go to your app store, search member view, download the app, enter the fund office code MARCC. It'll ask you to enter a fund office code, so that's where you'll enter in MARCC, MARCC, as the fund office code. If you've already created login credentials, you've been on the dashboard, there's no need to create new ones. Just log in the same way you have been. If you've never been on before, simply just go through the create account process and set up your account. It's pretty easy. And if you have any issues or trouble with it, or you get stuck, again, reach out to the fund office and we can help you. Just to touch on a couple of the changes that occurred this year, the EAS Carpenters pension plan change included the merger of the following funds. So these funds merged into the Eastern Atlantic States Carpenters pension plan. It's the Greater Pennsylvania Carpenters Pension Fund, the Mid-Atlantic Regional Council of Carpenters Pension Fund, Carpenters Local 491 Pension Fund, and the Cumberland County Carpenters Pension Fund. All those are now considered the Eastern Atlantic States Carpenters Pension Fund. With that came the elimination of the variable pension plan adjustment component. So accruals earned on or after January 1st, 2026 they're not subject to investment gains or losses. Any benefits earned under the VPP will still continue to be adjusted up and down. It's just going to be for those years that the VPP was in place. So from January 1st, 2020 up through December 31st, 2025, those accruals will still be adjusted based on the investment gains or losses. So with that, I'm going to turn it over to Katrina so she can go over your pension and annuity accounts. Katrina, take it away.
Thank you so much. All right. So again, my name is Katrina Baggerly, and I am the MARCC Benefit Funds Office Manager here in Upper Marlboro, Maryland. I'm going to go over your Eastern Atlantic States Pension Plan and your Mid-Atlantic Regional Council of Carpenters Annuity Plan. All right, let's get into the pension plan here. So the Eastern Atlantic States Carpenters Pension Plan, the plan year runs January 1st through December 31st. It's a pension plan, is defined benefit pension offered to active participants from New Jersey to Virginia, and it's a collective bargaining agreement. Now, this pension plan has three parts. Part one is the legacy pension plan, also known as the LPP. These are contributions and accruals for work prior to the VPP, and they are frozen and not impacted. Part two is the variable pension plan. Again, we call that the VPP here. The annual VPP accruals are both while working and in retirement and are subject to change depending on the performance of the plan's investments. Part three is our current pension plan. The current pension plan accrual is not changing. It is equal to 1% of benefit-bearing employer contributions made on your behalf. So again, that's the current plan is part three. So how is my pension accrual calculated? So we're going to take 1% times your annual pension contributions. Now, some CBA rates differ based on your work location, so you'll want to double check that if yours is different. All right, so let's say in 2025, I made $10,000 in pension accruals. So what we're going to do is we're going to take 1% times that $10,000 to equal $100 for my pension accrual for 2025. Now, obviously, if you work more, that will go up. So it's important to keep working. It's important to keep those hours up so your pension accrual goes up. Now, what is vesting status in the pension fund? So 5 years of credited service. So 800 hours or more in one plan year is 1 year of credited service. So in order to vest in the plan, you need 5 years of credited service. Now, prior to 1/1/2026, the vesting credited, you needed 1,000 hours or more to get one vesting credit. Now, 1/1/2026 and future, it is 800 hours or more for 1 year of credited service. Something new also is you can earn partial credits. So again, that plan year is January 1st through December 31st, and the credited services are anything less than 200 is no credit. 200 to 399 is a quarter of a credit. 400 to 599 is a half a credit. 600 to 799 is a third of a quarter credit. And 800 or more hours is 1 credit. Now, let's say you work 1,000 hours. You're still going to get that 1 credit for that year. So 800 or more is still 1 credit. And it's also important to remain active. You need to keep 200 hours. Now, the big question always is, when can I retire? When can I go to the beach and sit on the sand? When can I go to the mountains and go fishing? So normal retirement eligibility is 65 with 5 vesting credits, 5 years of service. Early retirement eligibility is 55, age 55, and 10 years credited service. Another big question, what are my qualifications for retirement? Now, here you'll see we do have some members who are considered grandfathered in the plan. Those members are active participants who reach 20 credited years prior to January 1 of 2013 and are eligible to retire at age 57 with 30 years of credited service. Unreduced normal retirement. If you're 62 with 30 years of credited service, you can go out unreduced normal retirement. Now, reduced early retirement. The key here is to remember it's reduced. So you want to think long and hard about getting that reduced pension to go out early. So age 55 with at least 10 years of credited service, or age 62 with 5 years of credited service. Now again, key, reduced. That's a 0.5% reduction for each month, if any, by which you're younger than normal retirement age. Normal retirement age is 65. The fund does offer disability benefits with requirements, so give the fund office a call if you would like to know more about the disability benefits. Payment options. What can I get paid when I retire? So options for married members are 50%, 75%, and 100% joint survivor options. These are reduced monthly payments depending on your election. Your spouse will receive the benefit equal to your election choice for life if retiree passes away. So what does that mean? So that means if I choose a 50% joint survivor, my spouse is going to get 50% of what I was receiving at the time of retirement. There's no reduction for 100% joint survivor option if you retire at the age of 65. If your spouse passes away before retiree payment pops up to pre-JNS election. So these options here are more for our non-married participants, but are also they're also for our married participants as long as you have spousal consent. So those two options are a 60-month payment guarantee and a 120-month payment guarantee. With the 60-month, the beneficiary received the remainder if a retiree passed away before 60 payments. No lifetime income for the beneficiary. 120, the beneficiary received a remainder if retiree passes away before 120 payments. No lifetime income for the beneficiary. So the big key thing with retirement planning and retirement is obviously planning. It's very key to plan and make sure you are planning ahead of time. That means reaching out to a financial planner or advisor for retirement decisions. Here we have pension payments on the 1st of every month. We advise you to contact the planned fund office 2 months prior to your planned retirement date. Those appointments take about an hour. If you are married, we'd like to have your spouse with you in the appointment because it's key that she's there to sign paperwork and to go over your options for your joint survivor. We'll need copies of your marriage certificate, birth certificate, and picture ID. If you have ever been divorced, we will need your divorce decree, separation agreements, and if you have a qualified domestic relations order, also known as a quadro, we'll need that. Those appointments we'd like you to make at least 4 months in advance so we can go ahead and get started on all the paperwork. Again, key to retirement planning is consulting with a financial advisor, planner, prior to contacting the funds office so you can go through all your retirement options with them. Working after retirement. Now, no one wants to work after retirement, but sometimes things happen and you need to. The fund office and the plan require certain rules for working after retirement. So anyone under the age of 65 is not permitted to work after retirement. Age 65 to 70 and a half, you can work up to $17,000 in a year. After that $17,000 is met, it's required that you only work a maximum 39 hours per month. Over age 70 and a half, participants can work as much as they like. Now, again, it's key if you're in that age 65 to 70 and a half to keep an eye on the money you are making so you don't go over the money, the $17,000 in a year or the 39 hours per month. Again, another part of planning is death benefits. How am I going to take care of my family if I pass? So post-retirement death benefits for this plan is $10,000, single sum death benefit paid to the spouse or beneficiary for all normal, early, and disabled retirees. Pre-retirement death benefits, those are members who have not started receiving their retirement. The beneficiary equals a payment of 60 times their accrued monthly pension at the time of death, unmarried. The spouse, married to spouse for at least 1 year, death prior to normal retirement age. The spouse will receive a monthly payment for life of 50% of the accrued benefit. There is a 120-month spouse guarantee. The beneficiary will receive a single lump sum if the surviving spouse passes before the 120 payments. Now, death after normal retirement age, not yet retired, spouse may elect 100% of the accrued benefit for life. No benefits paid to a beneficiary after the surviving spouse's death. Now, another form of retirement is your annuity plan. The MARCC annuity plan is a multi-employer individual account defined contribution plan, is a profit sharing account, which means interest is based on the plan's investment earnings. The investments are trustee directed. That plan year is the same plan year as the Eastern Atlantic States pension plan. That's January 1st through December 31st. You are immediately vested after the first dollar is contributed. Now, how is my MARCC annuity plan calculation? Beginning balance minus any payouts, minus the administrative fee of $10 per month, multiply interest rate percentage plus contributions. Now, the interest applied annually, and it's usually around April, and it's based on year-to-date earnings. Now, sometimes you have to think about distribution for your MARCC annuity plan. So your distribution eligibility is retirement or death, total and permanent disability, separation of service of 12 months. So that means you have to be out of work for 12 months in order to pull that annuity money out. Hardship withdrawal or a qualified domestic relations order. Your distribution options are a lump sum distribution, a rollover to an IRA or a qualified plan. You're more than welcome to keep your balance in the fund, and a required minimum distribution at age 73, which means that if you turn age 73, we are required to pay you partial of your annuity account. Now, we went over the hardship qualifications. You are able to take out a hardship if you have medical expenses, purchase of principal residence or prevent eviction, educational fees, home improvement due to catastrophic life event, or funeral expenses. Now, there are some distribution rules you can see down there. Some cannot exceed the amount necessary. So if you're trying to pull out money, we have to have documentation showing you need that money. And we cannot give you more than what that documentation provides. It can't exceed 1/2 of your account balance. You have a $50,000 maximum withdrawal, and you must not have a withdrawal within the prior 12 months. And you must have a balance of at least $2,000 in your account. Now, other important information, it's very important that you keep an updated beneficiary form on file with us, as well as a change of address. If you've changed addresses, we really need your change of address. That way we can mail you benefit information and keep you updated on everything the fund has to offer. Reciprocal hours. Those members who are trying to reciprocate money in or out, it's important that you have a reciprocal form on file with us so we can make sure we're getting your money to the correct place. All of those forms can be located on our website, or you can give us a call and we can mail one out to you. Now I'm going to turn it over to Heather Hatch, the medical supervisor, to go over your health plan.
Thank you, Katrina. Today, I want to briefly go over what your health plan looks like as an active member and as a retiree. So your active coverage. Once you become eligible for benefits by working the required amount of hours, you will be eligible for the fund's major medical benefits, which are administered by independent administrators. your dental benefits through Cigna Dental, your vision benefits through Davis Vision, and your prescription benefits through Express Scripts. It's very important to make sure you're keeping track of your hours to make sure you are going to remain eligible for benefits. In the event you do not qualify for healthcare benefits, you are eligible to pay up to a maximum amount of 100 hours towards your benefits for each eligibility period. It's important to remember you must be eligible in the benefit period prior in order to self-pay. Please also note the fund no longer allows bank hours. Prescription benefits are through Express Scripts. Below here, you will see the current breakdown of your current copay structure through Express Scripts. If you happen to get to the pharmacy and you have a copay that's a little out of the ordinary or very high, please contact us here at the fund office. We can see the claims in real time, so we can see if there's maybe an alternative or if maybe it's just not running through or if there's another situation in which we can help. Dental benefits through Cigna Dental. Your benefits for preventative and routine checkups are covered at 100%. Your vision benefits are through Davis Vision. Your exams are covered at 100%. You will be eligible for an additional $50 allowance if you use a VisionWorks provider. Mental health benefits are very important to us here at the fund office. Your mental health benefits are administered by independent administrators. However, we also do partner with a vendor called Manifesto Health. They have 24/7 recovery support service specialists for you and your eligible dependents, which are at no cost to you. So if you are in need of services, please contact either vendor. Another important benefit is all your preventative care benefits. The 3 vendors on the screen, the fund does partner with, and these benefits are at no cost to you. The first one is the Gallery Kit. It is a multi-cancer early detection kit that can be sent to your home, and it tests for over 50 different cancer markers. The next one is Catapult Health. We like to call it a physical in a box. And then the third one is Teladoc, where for non-emergency conditions, you can visit with a virtual care provider. All 3 services are available at no cost to you and can be done in the comfort of your own home. For additional details on these and more benefits, please visit the fund's website. In the event you are injured off the job, or you may have a medical condition that may keep you out of work for a little bit, the fund offers a loss of time benefit. You will receive 30 hours a week of credited hours towards your health benefits and your pension for up to 26 weeks. This monetary amount shown on the screen is a pre-tax benefit. It's very important to notate that if you are going to be out, please contact the fund office immediately and request an application. In the event an active member or a retiree were to pass, the fund does offer a death benefit. As an active covered participant, if you are eligible at the time of your death, your designated beneficiary can receive a death benefit of $10,000. In the event an active covered participant is to pass and the death is considered accidental, in lieu of that $10,000, the beneficiary will receive a $15,000 death benefit. Members who are eligible for retiree health, their beneficiary will receive a $1,000 death benefit from the health fund. So what happens after retirement? What does my coverage look like? In order to be eligible for retiree healthcare coverage, you must have at least 200 hours per work period that were reported on your behalf for at least 16 work periods in the 10 years immediately preceding your retirement date. Your coverage will be the same as an active covered participant until you've reached Medicare age. So once you retire and you're eligible for healthcare coverage, what happens next? So for the time frame that you retire, so let's say you retire for August 1st, you will be put into what we consider our runout period. The runout period is the time frame in which you and your eligible dependents will not have a premium deducted from your monthly pension. So for example, you want to retire for August 1st. You will be eligible for the remainder of that benefit period, so August through September 30th, and plus 1 additional benefit period. so October 1st through March 31st. This time frame, there will be no premium for healthcare deductions from your pension check. This monthly premium that would start as of April 1st of 2027 is set by the trustees. This amount will be deducted from your monthly pension. So what happens if you don't retire with healthcare coverage? You still get the runout period. However, it's only for the remainder of the benefit period. So same time frame. You want to retire August 1st. You will only be eligible for benefits until September 30th. As of October 1st, you will have to either elect insurance elsewhere, such as you will be eligible for the fund's COBRA benefit, or you can contact the health insurance marketplace to see what your options are. So what happens when I become entitled to Medicare? Your Medicare benefits are administered by Aetna. It's very important, as soon as you are entitled to Medicare, to contact us here at the fund office. You want to make sure you're enrolled in Medicare Parts A and Part B. Once we receive your Medicare card, we will enroll you in the Aetna plan. You will get your prescription benefits as well through Aetna. However, I do want to let you know that your dental and vision will remain the same, so they will still be administered by Cigna and Davis. So post-retirement, what happens to my eligible family members in the event I pass? Once the member passes, the spouse and the eligible children can remain covered under the plan for an additional 12 months at the current premium that you are paying. After that, the surviving spouse, and only the surviving spouse, will be eligible to remain on the benefit for the remainder of their life at the set premium by the Board of Trustees. Unfortunately, the children after that 12 months will no longer be eligible to remain on that plan. The children can elect the COBRA benefit, which they will be entitled to for 36 months, or they can find coverage elsewhere, such as the health insurance marketplace. So this concludes our portion of the medical. So I'm going to turn this back over to Seamus.
Thank you so much. Thanks, Katrina. Thank you, Heather. It's a lot of really good information provided. Again, we do know that's a lot to take in through this webinar. So please feel free to watch this video as many times as you want. Or if you do have any questions, reach out to the fund office or utilize the fund's website, marc.carpenters.fund. It's important to understand your retirement and the importance of planning. So Katrina touched on that. As part of planning for retirement is to seek out professional advice. So seek out a financial planner, somebody that can really sit down with you and lay out the plan of attack for when you get closer to retirement age. So it's never too early to start now. Even if you're 10, 15 years out, start planning for retirement. You want to know your health coverage and any expected costs, so both active and retired. This way you can plan for what those costs are going to look like. Obviously currently, and then once you hit that retirement age and you're into retirement, what is your healthcare costs going to look like? Understand Medicare and that Aetna Medicare plan. Heather discussed it, touched on it. So if you do have any questions as you get closer to Medicare age, please feel free to reach out to the fund office and we can discuss that in detail with you. Taking care of yourself, both health and well-being, the preventative services. They are pretty new for the MARCC participants, and it's the new offerings from the Health Fund. Gallery. Utilize Gallery. It's a kit that gets sent to your house, blood draw, and it can detect up to 50 cancer markers. Catapult. At least know your numbers. You'll be able to get your blood pressure reading, and you'll get to have your blood work, lab works, and lab results, and know your numbers, know the baseline. I mean, there's underlying conditions that don't have any symptoms. So make sure you at least are getting that blood work done every year to catch anything that's maybe you currently have, chronic conditions, maybe hypertension, high blood pressure, and then you can stay on top of it. And the third one is Teladoc. Use Teladoc, and we know it's hard to take time out of your day to get to the doctor. Life gets in the way. There's so many other things going on. So use that Teladoc app to utilize that either for urgent care. mental health, mental well-being, dermatology, and things like that. And again, it's important to optimize your retirement benefits. This goes back into the planning aspect. Optimize those pension and annuity benefits that you're working so hard for now, that are going to work for you in your retirement and for the rest of your retirement for you and your family. The next step is going to be registering for the town hall Q&A. So we touched on the high level overview of the benefits. We can get a little bit more in detail and deep dive a little bit further based on the questions that the participants have. So come with any questions, register, come with any questions you have, and hopefully you can answer those for you. So look for your Evite. We'll send it out email. We'll put it on the website, text it to you if we have your cell number. And we'll also put the link in the description of this video. So again, register for the town hall Q&A, which is Wednesday, July 22nd at 5:30. Come with your questions. And thanks for watching.